The cannabis industry is expected to grow dramatically over the next 5 to 6 years, with some projecting that it may become a $90 billion industry. In this video, I have a company poised to take massive advantage of this growth and acceleration in the cannabis industry. The name of that company is HITIF. Hey guys, Daniel here and welcome back to another video. Today we're going to be fully fundamentally analyzing HITIF stock, looking at three main things. 1. What is HITIF? What is their business? How do they make money? 2. A financial overview of this company, looking at things like their income statement, profitability, revenue growth, etc. Lastly, we're going to take a look at my 5-year price targets and projections for the company, along with my position and what I'm doing. So I hope you guys enjoy. So when we look at HITIF, you really need to consider it like a parent company that has a bunch of different subsidiary brands, right? So we have HITIF, and then we have around 8 other brands that span across retail and e-commerce cannabis stores, right? So we have physical locations where you can go and actually purchase cannabis, and you have an online store where you can purchase cannabis for yourself, right? So two different things. This allows them to gain more exposure and increase their total addressable market by a significant margin. When we look at them currently, their physical locations are only in Canada. They have 77 of those under 4 retail brands. Their e-commerce sites give them exposure to the international market, to the US, to the UK, to Europe. The CEO has expressed a strong desire to expand their physical locations into the US eventually, but that's not on the radar in the near term. That's something that they could expand into possibly in the back half of the next 5 years here, if not a little longer. But I think that's a great opportunity for them if they eventually do choose to expand to the US. First, let's look at these 4 retail brands just briefly. 1. Cannabis. This is a very, again, modern, joyful, almost like a beachy store. This is a place you go to get your cannabis. You go, you get your stuff, you get out, right? Very quick. Next, we have Cannabis. This is a company that HITIF actually acquired a few months ago, and this is more of almost like a futuristic, again, also modern kind of vibe. Again, there's not really too much to talk about with these stores. All I can say is that they all look exceptional, very modern, and not too cluttered. I think that's something that really drives consumers away if they see a very cluttered store. These actually look very nice and look almost like an Apple store. Next here we have New Leaf Cannabis, and again, it's very simplistic, not much inside of the store, just, you go in, you get your stuff, and you get out. Very modern. Next here we have Kush Bar, and again, this one is a little bit different than the other ones. This one is very focused on the experience of cannabis, coming in, really educating yourself, and just, you can see with the benches here, all about education and buying your cannabis on spot. So a little bit different and something I haven't really seen before in the cannabis industry. So in total, we have 4 retail brands, and now we have 4 e-commerce brands. And again, all of these are international brands, meaning you can buy the products in the US, in Canada, in Europe, and in the UK. The first one here is Grass City. Now this one is very interesting as it currently is the largest online retailer of consumption accessories. So this isn't actual cannabis, it is the accessories used to actually intake the cannabis. It experiences 130,000 orders annually across the US, Europe, UK, and Canada. And it also experiences 20 million site visits. They're starting to experiment with selling CBD products. So that's like natural oils and lotions on Grass City platform. I think that's a place for them to expand in the future. But, I think the accessory market is huge, and we're really going to emphasize this with a few of the other brands. Next year, we have Valiant Distribution. I think this is one of the most important ones almost, as it is a manufacturer and distributor of cannabis accessories. So these are the accessories that you see in Grass City. A lot of those are actually manufactured in-house by Valiant, a company that HITIF also owns. So that's how you get that vertical integration between all the different companies. They have 2 different facilities, one in Las Vegas, one in Calgary. I really like that as it gives them separate exposure to the US as well as Canada. And also this distributes to all HITIF channels and international networks. So all of the retail brands have Valiant accessories, and all of the e-commerce brands use Valiant to also, produce their accessories as well. And then they also have certain wholesale distributors that they use. So a very important company for HITIF, and I really like where they're going in the future. Next here we have CBD City. This was launched around 9 months ago, and this is all focused on CBD. So, oils, skincare, edibles, sports, vapes, and for pets. Not really too much to talk about here. If you're interested in any of these e-commerce sites, I really recommend going to Google and searching them up and looking at them for yourself. Finally, we have famous brands, and this one is actually very interesting. It's also all about selling the cannabis accessories, but they really focus on partnering with a lot of celebrities to sell their cannabis accessories. One of the most prominent ones is Snoop Dogg. They partnered with Snoop Dogg, made a bunch of different cannabis accessories, and slapped the Snoop Dogg name onto them to really increase the exposure of the product. I think this is absolutely brilliant. I'm really looking forward to see where this brand goes in the future. So that is essentially all of the different subsidiary brands that HITIV owns. Currently, all of the retail shops are in Canada, while the e-commerce stores give them exposure into the international market. We can see this pretty dang clearly through the revenue by geographical market. Canada makes up the most currently, and when we look at the US market, that's solely off of the e-commerce revenue. Expanding to the US with physical shops could be huge in the future, and I think that will present a pretty big opportunity for HITIV. And then we have international revenue, which makes up a significantly less portion of their total revenue than Canada and the US make up. I really want to touch on the CEO of HITIV, Raj Grover. This is a very interesting guy, and it's one of the reasons why I'm so confident in HITIV. Here are a few takeaways from his bio. He is the founder of HITIV. I really like investing in a founder-led company because there really is something to be said about having someone work at that company or run that company that's been with it since the very beginning, been through the highs, been through the lows, and he understands it on a super high level, on a level that no one else understands the company, since it literally is his baby that he's nurtured since 2009. He is also committed to building a strong, profitable, and sustainable business. I think that's huge. I agree that HITIV has the potential to become a cannabis giant in the future, and I think he's the perfect man to guide HITIV into the future. He is also a very philanthropical person, nothing bad to be said about that. So let's keep going here. When we look at HITIV stock, ticker symbol HITIF, this trades on the OTC exchange at a market cap of $423 million. Now, we can't really look at this chart or the OTC version of the stock as the company reports in Canadian dollars. So we got to look at the Canadian Securities Exchange version, which trades at 86 cents or a market cap of $524 million. So essentially just shift your mind into Canadian dollars for the foreseeable future here of this video, and all the percentages and metrics all stay the same when we look at the OTC version, since it literally is the same company and same stock, just in a different currency. So when we look at their revenue, we'll see that it is growing significantly, going from $5 million in Q1 of 2019 to $13.7 in Q1 of 2020 to now expected close to $30 million in revenue in Q1 of 2021. So you can see here, even in the year of a pandemic, this company has gone from $13.7 million in revenue in Q1 of 2020 to $24.9 million in revenue in Q4 of 2020. And keep in mind, a lot of their revenue comes from retail locations, which have been closed for a significant portion of 2020. So you can make a good argument that this is actually a recovery play built into a high growth name, which is something that I really like and really, really makes me confident going into 2021 and 2022, where we see more of a recovery into physical locations. When we look at analyst estimates, they expect this growth to continue, expecting revenue to grow 111% in 2021, growing to $176 million in revenue in 2021, and then $258 million in revenue in 2022, or 46.6% growth. These numbers are going to play into my price targets and revenue projections, which we'll look at in a bit. When we look at current valuation, we're looking here, this chart has the forward price to sales ratio of companies like Tilray, Canopy Growth, Cronos, Aphria, and HITIV. So essentially what we're doing is taking their market cap right now and dividing that by the revenue expectations for 2021. So with HITIV, they're expecting to do around $180 million in revenue, and their market cap's around $500 million. So we have a price to sales, or a forward price to sales ratio, of 2.4. This is significantly less than a Cronos, which trades at a 40, or a Canopy Growth, which trades at a 27, or a Tilray, which trades at 14, or an Aphria, which trades at over 10. This kind of divide here is very interesting, as in my opinion, High Tide is one of those companies that has the most growth potential in the future and has one of the best opportunities to become profitable as well. This is a very profitable company with gross margins at right around 37%. Now, not all of that is getting recognized currently, but they're on the cusp of breaking profitability. They had their first profitable quarter in Q3 of 2020. I think as the year goes by, or as the years go by, we'll see more and more profitable quarters, eventually until High Tide consistently starts flowing out a lot of profits. And that's going to be very interesting and beneficial for the business and the stock. When we look at their balance sheet, we'll see that they have around $38 million in revenue currently. As of October, they had around $7.5 million, but they raised a lot of money since then, and that now sits at around $38 million. Their current debt is right around $16.3 million, long-term debt $13.9 million. They could pay all of that off and still have money left over to pay things like interest expenses or their leases. So I am not worried with High Tide whatsoever when it comes from a balance sheet perspective. And worst case scenario, they dilute 4%, 5% possibly of their shares to raise a little bit of money. It's not like a horrible debt situation, which you see rather with some cannabis companies. Like, you see some cannabis companies have more long-term debt than their actual market cap. So seeing this, this balance sheet is really a relief, in my opinion, and makes me really confident in High Tide's future. So main takeaways. High Tide is a quickly growing business, and that growth is expected to continue in the coming years. They're a profitable business as well, with gross margins sitting right around 37%. They've got lots of cash on hand to prepare for essentially anything, and the company is founder-led. All of these things are positives, and now let's look at my long-term price targets on the stock and my projections. So when we look at the current share price of right around 81 cents, keep this in mind. I'm going to have this linked down below in the description. You can actually check this, whenever you want. I'll be updating this spreadsheet. If anything else happens with High Tide, or we get some, new news about profitability or revenue growth, I'll make sure to update this. The share price also updates, once every day, to really get an updated version of this. So current share price right around 81 cents, shares outstanding 610 million. We multiply those two together to get a market cap of right around $500 million. So that's the math behind the valuation. Now let's look at my revenue growth projections. Analysts expect revenue of around $176 million in 2021. I highlighted these two numbers in blue as I'm using analyst expectations. In 2022, they're expecting growth to actually slow down pretty significantly from 110% to 45%, and to get revenue of $258 million. What I did then is use the compounded annualized growth rate of 35% from 2023 to 2025, which gives us $634 million in revenue by 2025. Now, currently their gross margins are right around 36%. I think in the future they could get this up to 40%. As they continue to expand, their focus isn't really on profitability. I think eventually when they start focusing not as much on growth, they'll be able to actually focus in on profitability and focus on how can we make this business as profitable as it can be. Then we have operating expenses and taxes. Currently, general and administrative expenses is right around 25%. Then I included around 7% for taxes. Is that enough? Possibly. I'm not really sure, what High Tide's tax rate will be in the future. It's very hard to predict these things. But again, you can consider the general and administrative expenses a leeway, as currently they're right around 25%. And, will they be 25% 5 years down the road? Maybe. I personally think that could actually decrease down pretty significantly. And that gives us a bit of leeway when it comes to those taxes. That gives us a net income margin of right around 8%. Meaning that for every $100 that comes in revenue, $8 goes down to the bottom line in net income. So for that $634 million in revenue by 2025, we get net income of $50 million. Then I apply a price to earnings ratio of 40, and we get a market cap of $2 billion, or a price target of $3.33 per share. And here you have the individual upside percentage-wise and 5-year compounded annualized growth rate. So could you consider a 40 price to earnings bullish or bearish? I personally think that it's about fair. Given the growth that High Tide is experiencing, right around 35%, they're going to have to trade at a premium compared to a lot of these, stable value stocks. So a 40, I think, is fair. If something, I see them trading potentially at a 50. So this is my base case. Now let's look at my bullish case. Let's say the company actually outperforms over the next 5 years when it comes to revenue, right? So instead of 176 million next year, we get maybe 185 million, right? And then in 2022, we potentially get closer to 200, possibly $90 million in revenue. And then let's say they grow a little quicker over the next 5 years here. Let's say potentially they start expanding into the US and that actually generates a lot of revenue for them. Let's bump this up to maybe, 40% potentially. In that case, we get $800 million in revenue by 2025. And let's say at that same time, they actually managed to decrease their operating expenses by a pretty significant amount, potentially going to, 30% operating expenses. That bumps their net income margin to 10%, right? And let's say with that growth that they're experiencing, they now got to trade at a bit of a richer valuation, maybe a 50 price to earnings ratio. Look at the difference in price upside. Now 700% on the upside, a price target of over $6 per share, a $4 billion company. Now, will this happen? Probably not, right? I think it's more realistic to assume that my previous estimate will happen, right? As it uses more conservative numbers. But can we prepare for this situation? Could it potentially happen? Yes. And that's what makes High Tide as a company so exciting. And that's why I'm invested in it. So now let's focus on what I'm doing with the stock. Personally, I have 7% of my portfolio in High Tide. I really like this stock for the long run, and I really think the opportunity here is massive. I don't think there's too much downside given their growth, profitability, and the way the cannabis industry is growing. I really like this company for the long run. Let me know what you think in the comment section down below. Thanks so much for watching, and have a great day.